Welcome to you to this parallel session number 3, day 2, Bancon 2013. The theme of the session, gearing up the human capital, managing talent for the next wave of growth. We have eminent bankers and distinguished HRD luminaries in the panel. The chair of the session is Madam Usha Thorat, former Deputy Governor, Reserve Bank of India, and presently Director, CAFRAL. Dr. J.N. Mishra, he is DMD and CDO of State Bank of India. Mr. Mohan Das Pai, Chairman of Manipal Global Education and former CFO and HR Head of Infosys. Mr. Alan Pereira, former Chairman and Managing Director of Bank of Maharashtra and presently Director, National NIBM Pune. Dr. Shantanu Pal, he is CEO and MD, Talent Sprint, and Dr. K. Ramakrishnan, former Chairman and Managing Director of Andhra Bank, and presently Chief Executive of Indian Banks Association. Now I request all the panelists to kindly come onto the stage, escorted by.
This is clearly managing talent and HR is clearly perhaps today one of the most important topics for banks in India. In preparation for the conference, we had the opportunity to do a very extensive survey. We actually surveyed about 10,000 employees across 20 banks, both private and public, and also got information from the HR departments of these banks around HR practices and so on and so forth. What I will present over the next approximately 8 to 10 minutes is basically our findings from this survey, which can be a good background to frame the discussion for today's panel. So just to summarize from the survey, there are 4 interesting and important insights. The first is around manpower and succession planning. Particularly in the PSU banking world, there is an expectation that over the next 2 to 3 years, there'll be a significant gap in people, particularly at the senior levels. And that raises a very pertinent question of how we plan for manpower and how do we plan for succession for these roles. The second one is around recruitment and onboarding. There has been a lot of recruitment done by the banking world in the recent past. But the onboarding process, which is how we get people onto the banking platform, how we excite them, motivate them, engage them, train them, is something that is lacking from our surveys. So that's another question for us to debate on how do we ensure that that onboarding process is strong and systematic. Third, around performance management. And again, this is a problem which is far more intense in the public sector world. All our surveys and all our work with the bank show that most people in the PSU world are rated either in the first or the second bucket in terms of the appraisal. So there seems to be little differentiation in the way performance appraisals are conducted, and hence, how we manage people and how do we coach, upskill, train them also is not very effective. And finally, around capability building and training, there is significant variation in the investment that happens in this area, and also in the quality of programs that are being taken up to build capabilities in the people. So given this, our belief is that there are 4 areas that banks need to think about. First is just being much more scientific about manpower planning and succession planning. Second is being much more transparent around what the KPIs are, how people are performing, and have real, honest discussions around this. Third, creating training programs based on core and specialist skills, which need to be built, and that's very critical, particularly at senior levels. And finally, building a talent development and leadership development engine, which feeds continuously senior levels in the banking system. Let me take you through a few charts which show the output from the survey, and then I'll hand over to the panel. So first here, I would like you to focus on the left, top side of the left, just based on retirements and attrition, we expect between 10 to 15% of senior management positions in public sector banks to be vacant. This, by the way, does not incorporate for any increased attrition arising especially from poaching because of new bank licenses, etc. We expect a lot of people to move into those roles as well, but we have not included that here. So likely the gap is going to be even higher than what you see here. Next on, the onboarding programs and training programs. Almost half the people in the banking industry do not believe that the training programs are good enough to get them upskilled for the jobs that they're doing. So that's another question to ponder around now. How do we kind of increase the effectiveness of these programs? This is an interesting chart. The light blue line is the public sector dispersal of ratings, distribution of ratings. And almost 90% of people are in the top two buckets. Whereas if you look at the private sector world, which is the darker blue, it's much more of a bell curve. And there again lies the question of how these performance management discussions are being conducted and how the ratings are being done. Another interesting area to ponder and to think about. This is particularly stark in junior management levels. You will see here that across various types of questions being asked around the type of KPIs, the incentives that are being provided, the kind of engagement and the coaching conversations that are done, the ratings of people who believe that this is done in the right way decreases quite dramatically as you move from the senior management to middle management and junior levels. So again, question of how are we defining the KPIs, how are we conducting appraisals, and how are we having discussions around these points. We spoke about this significant variation, almost a 90% variation between the top quartile and bottom quartile banks in terms of how much they invest in developing their people. This is a very quantitative view around the amount of money being spent in training and leadership development programs. There is another question of how effective these programs are as well, even if banks are spending money. And there again, we find from our discussions that there is significant potential for that quality to improve. So overall, just to kind of summarize, again, we believe there are 4 areas for us to think through. Recruitment, onboarding, and engagement. How do we make that much better? Performance management. How do we be much more honest with our people around performance management, and how do we manage the consequences that arise out of that? Capability building. What is the holistic program that we put in place to ensure that different types of skills are available in the bank at various levels, and there is an engine that keeps feeding this. Leadership development and succession planning, and also some elements of organization, particularly given the new thrust on digital banking, financial inclusion. How should we think of organization structures to meet this gap? So those were some of the findings from the survey. I'll now hand over to the panel to discuss these points. There are some pertinent questions that this has raised already. Thank you.
Thank you, Samit. Thank you very much. The kind of expansion the banking industry has really gone through the last 5 years, it's perhaps also an awareness, and this is being pushed forward, that the financial intermediation that needs to take place for a growing economy and the kind of growth rates that the economy has had has required the banking sector to really push the envelope very significantly. The financial inclusion is another reason why the banking sector has had to really push very hard. The large-scale retirements also have only exaggerated and exacerbated the skill gaps and the gaps in the various line positions along right from the top to the bottom. The new banks, the challenges that come out of the fact that there is a whole pool of people already with the existing banking sector who obviously would be eyed upon by the new banks when they come in. Then, apart from all this, there is the banks, especially the public sector banks, work within an environment of HR policies which are basically set. There are certain promotion policies and transfer policies which make it obvious that it's quite difficult for specialization to be created in specific areas. Whereas what we find is that as bankers reach higher positions, their ability to remain in a particular expertise or specialization becomes less and less. So that you actually are very short of expertise at the top level in certain very, very specialized areas. So these are the various gaps that the banks are currently facing. And to address this, I would first request the Deputy Managing Director of State Bank of India, Mr. Mishra, to give his thoughts, to be followed by Mr. Ramakrishnan's thoughts on the same subject. Mr. Mishra.
Thank you, Madam, for the kind words. Thanks, McKinsey team, for putting this issue in proper perspective. I'll be sharing my experience in State Bank of India, but I think it will mirror all public sector banks, because the problem which we are facing, or challenges which we are facing, are almost equal in all public sector banks. As all of you are aware, the challenges which are surfacing now, or it has anticipated a few years earlier also, are mainly because of three reasons. One is large-scale recruitment after bank nationalization. Large-scale recruitment took place in early 70s, and all those people are attaining superannuation at this point in time. So large-scale retirement is happening, so that is creating one challenge for the banking sector. Secondly, there was a decade-long period where no recruitment took place, and as a result, a vacuum has been created. And third and most important thing is the emerging environment, which is posing challenges in the form of new banks coming in the form of economy opening up, in form of the ways and means in which we are doing banking, that is changing. So these are the principal reasons for our having this gap in the banking sector, and especially in public sector banks, which are old and working for a long period in time. Such kind of void, as Madam Thorat was mentioning, that is not visible in new age private sector banks, because they have come into this area at a later point in time. So how to respond to this challenge? Now, to my mind, the three levers which are very, very important to respond to this challenge, one is IT, one is capital, which is most important, and third is human resources. Now, IT and capital augmentation is not very easy, but can be done with some effort in a shorter period of time. But human resources is something which cannot be changed overnight, and not in a short period of time. But the way the gap is arising, that gives us an opportunity. So from challenge, we are also getting opportunity to change the size and shape of our manpower resources. Now, how to do that? I think first important thing is our requirement planning. I understand that there are 5 pillars on which the entire problem stands and can be addressed by taking into account 5 aspects. First and most important thing is requirement planning. Second is recruitment, promotion, how you are going to recruit, how you are going to promote. Third is onboarding. When people come, how we take them to our fold. Fourth is talent management, how in an organization we are managing our talent. And fifth is succession planning. Now, having said that, in requirement planning, the important aspect of requirement planning would be, because of change in economic environment, what are the business changes which are happening, and for that, what type of changes we need to have in our skill set, in our manpower resources. So this is number one. And number 2 is financial inclusion, which is also providing us a lot of challenges. Second most important thing is how to shift from traditional banking environment, that is brick and mortar model, to alternate channel, and by that, how we can utilize our manpower in a proper way. And third is how best we can improve our productivity. So if these 3 things are analyzed, and I think all banks are doing that, we can zero into the gaps which is existent, and we are also are very sure that what type of manpower we require at what point, what scale or what level of our resources. So for that, we are also changing our recruitment pattern. See, in State Bank of India and in most of the public sector banks, the recruitment happens in entry stage, and that also in clerical stage as well as in officers cadre. This is one which I think all banks will will continue in days to come. And second is lateral recruitment.
Maybe because of the time constraint, maybe you can just sort of focus on 2, 3 different things that maybe you may be doing, because the gap is so big. I mean,
Yes,
we need to kind of
Yes.
try to focus on the specific out-of-the-box things, innovative things, things that you're looking at, because the problem we are facing today is like what somebody described as a perfect storm. Everything is coming together at the same time.
Right. So I think 2 most important things which we need to focus is, one is talent management, and second is how we can apprise our people. Because these are the challenges in public sectors. Now, as far as talent management is concerned, we are first trying to find out a leadership pipeline. And for finding out that leadership pipeline, we have set some parameters on which we can do that. And after that, we are placing them in different positions so that they get proper exposures. They are mentored by the people so that they are groomed to take up the new job. This is one thing. And in performance appraisal area, we are also shifting from the traditional annual appraisal system, which in McKinsey presentation they have mentioned that most of the people gets the top grade. So we are shifting to a system-driven performance appraisal system. There are some methods which are available in the market, like a balanced scorecard approach. So we are shifting to that approach so that we can have proper assessment of the people, and we can give proper assignment to the proper skill set. And thirdly, we are also working on having a system-driven succession planning, so that for each position, we will have at least 3 people who can take up that job. So these are broadly the areas which we are working on to address this gap in the skill set. Thank you.
Would you like to comment something about how are you using outside experts and lateral entry?
Lateral recruitment, we are considering in specialized areas mostly, like in IT or in risk management, or we are recruiting chartered accountants, and then we are recruiting, say, economists. So wherever we require some specialized inputs, which need to be met in a, for that we are going for lateral recruitment. Lateral recruitment we're not going, as a general recruitment policy, because we had done that, but we had some experience on that. So only for specialized jobs we are going for lateral recruitment.
Thank you. I'll request Mr. Ramakrishnan now, because he's not only has his experience as a CEO of a of a bank, but also for the last 6 years in IBA, he's had quite a lot of insight into many of these issues, which have obviously been on top of the mind. So, Mr. Ramakrishnan.
Thanks, ma'am. The way I look at this problem, it has two aspects. The first is there are indeed gaps at the top level, at the level of DGMs and GMs, as Madam rightly pointed out. And these are creating its own difficulties for the banks. And the reasons why it has happened, Mr. Mishra has beautifully brought out. That makes my job much easier. The second problem or challenge for the banks is at the junior levels when we are having recruitment in a large scale. How do you ensure that the attrition is reduced and then people stay and sustain with me? And therefore, at the industry level, we have to get this problem sorted out. I personally feel that why these gaps are occurring. If there are large-scale recruitment which has happened in the mid-70s, it's well known that these retirements are going to happen in this part of the century, 2012, 13, 14. So it's just not actually acceptable that we didn't plan for it. One. Somewhere I thought the starting point should be the commitment of the top management that this must be something I have to engage myself throughout the year. The chairman and the executive directors are people who come for shorter duration. I would place the responsibility at the level of general manager. Dealing with the gaps in the top management, I feel somewhere from scale 4, we must start the grooming part of it. The way I would look at it, kindly draw down the sort of areas which are critical for the bank, whether it's treasury, whether it's forex management, whether it's investment, whether it's credit, information technology, systems audit, and so on and so forth. I have to look at it that in these departments, in these important critical areas, I'm having the top man and then are there 2 lines below? Are they safe and sound? This has to be an exercise that must be ongoing. Unless and until we are going to devote this sort of time and we are going to believe in it, things are not going to happen. If there are gaps occurring, somewhere down the line, the management has failed. Point number 2, how are you going to actually make this happen? What Mr. Mishra made a fleeting reference. I want to dwell a little deep in this. Talent management is a broader subject. I would say that at the level of scale 4, scale 5, scale 6 and 7, each and every official has a job or a role in talent spotting. When I say talent spotting, it has to be a part and parcel of my job. Where is the talent available for me in my organization? I have seen, interestingly, very many chairmen adopting different, very interesting styles. Before any promotion, I have seen one chairman telling to the people who are going to appear for the interview, kindly give me your information, whatever you have done, and then give me the reason why you must get promoted. I have seen certain chairmen telling his own immediate top management, identify 2 important people who needs to be promoted and why. Similarly, there are institutions where the top management has taken the pains to say that each of the AGM, DGMs and GMs will mentor 2 or 3 officers under them. I'm telling you, this is practical, it can happen. The moment I take responsibility for mentoring a person in a particular specialized field, I'm going to engage with that person. If there are 100 officials in the bank who are occupying the top rung, if each of them are going to take 2 or 3 as people to be mentored in different skill sets, I don't see any reason why the bank should have gaps. I feel personally that we have to have the determination and very clear-cut approach which must become the culture of the organization. People come, people go, but this must happen on an ongoing basis. I would rather strongly recommend, which I'll be talking a little later on, if we get opportunity, in the performance appraisal system itself, every appraiser has to say who are the 2 people whom is going to groom, and on a regular basis. I get the talent pool from these sort of sources. Very many banks have told the training colleges, whenever trainings do happen, from time to time, the principal must identify 2 or 3 very smart fellows who are in the training program, who are showing extraordinary skills in terms of their own actually understanding of the subject. Very many times when chairman, ED, top management do go and interact with the staff members at different levels, they have given small problems to set of people. You have performing managers, they're a small team for me as a chairman. The moment I give a problem to them, I get better solutions. This is true for even DROs. They are intelligent people, they are capable people. Are we empowering them with certain issues which only I am capable of solving? No. Wherever you have entrusted them with a problem, they come out with better solutions. Well, PSBs can have constraints in terms of compensation, reward, recognition, empowerment. There is no dearth. What is required is at the level of the chairman, ED, and the general managers and top management, we have to inculcate this culture whereby we are going to spot. And what is that final theory? It is 10-80-10. 10 people are beyond repair, forget about them. 80% are normal performers who are going to perform, I take care of them. 10% are exceptional. In my talent spotting, from scale 4 and above, I have to spot this 10%. The grooming starts, the mentoring starts, the coaching starts. It has to be an ongoing basis where the pipeline begins at scale 4, and when I'm spotting them, they are going to be my leadership. This focus is not difficult. It has been practiced in banks with great level of success. But again, I end up saying that the top management has to believe it's their responsibility and they're accountable for it. Yes,
ma'am. Yeah, I think that was very forcefully put and deserved that round of applause. Mohandas Pai, we'll request you now. Why don't, now that you're so into education and employee engagement has been a subject which you have dealt with in your earlier avatar as well, what would you like to talk about on how obviously banks have been recruiting a lot. How do you get them onboarding, which is apparently not happening? How do you handle attrition? How do you handle retention? And finally, how do you look at this whole aspect of, having an out-of-the-box way of, and I think you're always known for that, so I expect you to come out with something of that kind.
Thank you, Madam. I will answer the question in 3 steps, but talking about the generation gap, innovation, and onboarding in that order, because I think there's a sequence. First of all, I think all of us in industry have a major problem, because the people we are inducting at the entry point are the people born after liberalization. The worldview was formed in the first decade of the 21st century. They're all part of a technology revolution which has changed the world forever. The behavior is very different. Now, we all grew up in an era when we grew at 3%. Our worldview was possibly formed in the 70s or 80s. It's a very steady era. Things were predictable. Things were not disruptive. We were close. There's not much competition. The world was a very different place. But today the world is a very different place. So I don't understand my own children. I don't know how you'll understand the employees who are coming and joining you. So they're very different. They're very different animals. And remember, if your worldview is formed in the first decade of the 21st century, what was the catalyst of the decade? Great change, rapid change, high growth. We grew at 8%. High growth. Lots of jobs, less people. Huge compensation increases, fast-paced promotions, a lot of wealth creation, consumerism, technology, Facebook, Twitter, social media, freedom to speak, freedom to say any rubbish that you want, and a lack of a respect for hierarchy. Now, all those characterize the people who are going to join you, and they're going to join a very structured, old industry based upon tradition, rooted in a particular culture, a culture of risk minimization or risk management or whatever it is. And these are risk takers. So there's a big gap between the institution they're joining and what they are. Now, how does the banks handle this? And I would say first, you need to create a profile of the people who are joining you. Profile of the people. What are these people? Where do they come from? From maybe the people who joined you the last 3-4 years. Where do they come from? What do they like? How do they behave? What motivates them? What kind of communication they want and everything else. I think it's very important to create a profile and understand the profile. Maybe create 10, 20 profiles of both boys and girls who come and join you so you understand where they are and socialize this profile amongst all your people so that you understand what they can be done. And second, create an open, transparent culture in the enterprise. What young people want is communication. They want to be informed. They want to reach out to people. If they got an idea, they want to talk to people. So there's got to be a greatest openness about the organization. It doesn't have to be openness about whom you lend and what you do, but it has to be an openness about how you talk to them, how you reach out to them, and how you communicate with them. Because they want communication. In Infosys, when we went through a HR change in about 2008, we had great difficulty. And we were a good company. We knew all this thing, but we had great difficulty because they went on social media and bashed us up. And they wrote a lot of stuff, and the whole world thought that there's turmoil in the organization, there's something fire burning, whereas they were all very small things. So this communication, I think, is an important thing. And then you're going to have, like Mr. Ramkrishna said, a group of mentors. There's got to be a group of people who are going to say, we're going to take care of these young people. We're going to talk to them. We're going to communicate with them. They can reach out to us. And having a group of mentors and training people to be mentors. Now, we got Amola here, who specializes in mentoring. And we're seeing this rise of these mentoring skills. Because mentoring skills are very unique skills. They're not available. Because they never use mentoring. When used to a command and control regime, right? People, you spoke, you are chairman, people listen to you. They never ask you questions. Now you speak to them, 10 people will ask you questions. And they will ask the manager the question. And the manager will be upset. How can you ask me questions? So we got to create mentors who understand them. They understand the mentors. So somewhere it has to be a meeting point between halfway. And then we got to train our senior people how to handle these people. We got to train them. The training is very important. Because if you don't train people how to handle, they'll be discordant and they will all leave. Why do people remain in organization? They remain in organization because they got a great manager who creates a dream for them. They remain in organization because they're empowered, they can do many things. They remain in organization because they can communicate and talk openly. They feel very important. They don't remain in organization because you pay them better and better. In fact, when we made a study, we found that the greatest reason why young people stay in organization is because they can grow fast, they can add to themselves, they can communicate, they can do things, and they feel important. It's important for them to feel important, feel themselves self-assured. So I think these are some of the things that need to be done to manage this new generation. And then I want to go to another topic, innovation. How to create an innovative culture in a very regulated environment. Of course, if you innovate too much, you know what happened in 2008, right? And Madam Usha is not going to allow you to do that, right? She's going to make sure that you don't blow up your balance sheets. So innovation has to be in very different ways, in service delivery, in the way you deal with customers, in the way you act internally, and the way you come out with ideas for products and all that. So you got to, innovation flourishes best in an open culture. An open culture which is non-hierarchical in many matters. For discipline, you need a hierarchy. But for many other matters, you don't need a hierarchy. So you've got to create this openness and transparency in the culture in which the leader has to play an important role. The leader has to communicate to everybody. Send an email every month telling we've done this, we've done this, we've done this as information. Meet people wherever you go. Have a brown bag lunch with them. Have a town hall and talk to them. Communicate, communicate, communicate. And everybody there has to communicate. By communicating and reaching out, you're going to create a culture of openness. Next, leaders have to learn to listen. Very often, leaders only talk, they don't listen. All of us have this bad habit. We give jnana to everybody. We know everything. We know everything. We got a solution to all problems, and solutions to problems that don't even exist. We're going in search of solutions for problems for which we have a solution. So, we have to learn to listen. People want to talk. And I learned this, madam, in a committee with Vijay Kelkar for direct tax reform, because Vijay Kelkar had a very disparate group of people, including Urjit. And we are much younger, so we used to fight. I used to fight with Urjit. We used to fight. And we had this committee, and every time we had a meeting, we had to fight. But he allowed us to speak. And after 10 meetings, he wrote a report the way he wanted, against what we stood for, and we all signed. I learned that in the committee where I was working under you. She made us talk, she listened to everybody, and then she wrote the report. We all signed. It's a good report. We believed in it. Maybe some things we didn't like, but she said this is the way. We all signed. Because why? She listened to us. She allowed us to express. I think Indians like to express. They want to be heard, and I think we should learn to listen, and I think that's important. And then, creating a funnel of innovation, funnel of ideas. Create a culture where people can write to you, give openly ideas, you meet them, you talk to them, create a funnel of ideas, evaluate these ideas, and just make them feel that the ideas are worth it. Not that you have an idea box where you put something with nobody bothers and all that, because you have to talk about it. And when you communicate every month, you write about so-and-so gave this idea, it's a fantastic idea, we're looking at it, blah, blah, blah. So people feel important, and that's important. And the last thing I will say is recognize people. People want to be recognized. Young people today want to be recognized. In America, there's a culture, even if you do wrong, you must say, thank you very much for making the mistake. Hopefully you learn again. So I don't know how it, if you make a mistake, you call him and tell him, Arey bhaiya, mat karo. You made a mistake, right? But here, people want recognition. So people do good things, recognize them immediately, pat them on the back, take a photograph. They all like photographs. They put it up on Facebook. So do that. So I think innovation is the culture of innovation. I mean, innovation is the culture of openness. Then onboarding. Onboarding, we have a major challenge because you are recruiting a large number of people. They come from very disparate backgrounds. They are very mobile. They have high aspiration. They want good growth. They want communication. And they easily spread messages. And they'll create Facebook profiles of your manager and write nasty things about them. They make fun of you. And these are the kind of people who come. So you've got to onboard them. So you've got to think clearly through an onboarding exercise. What we did in Infosys is we brought them to a campus. We put them through a process. And we told them what we expect from them. We introduced the corporation to them, told them about business strategy, and asked them for strategic ideas. And they gave us a lot of strategic ideas and business plans. And we said, well, you have to execute it after you get along. Then we had a structured program for them. And the program was very open, transparent, and we put them through a pace. And we created talent for the entire world. And the idea we told them is you go through this onboarding exercise, you get life skills and you get the skills which will last you a long time because this is going to be the biggest asset on learning that you get anywhere. And we give you the best training. So you need a good onboarding exercise. And in the onboarding exercise, senior management has to participate. It cannot be that somebody does it, some trainers do it, and you stay out, and suddenly they come and do. Because they got to understand who is going to be the branch manager, and whom are they going to meet, what are the culture of the bank. So senior people, your chairman, your general managers, EDs have to come and talk to them. And then for bankers, simulate your bank. See, you want people to hit the ground running. Simulate the bank because you are a technology-intensive institution. You work on technology. And for an outsider to work on technology, and you have very different business processes. You have very different forms, know by customer and all that. So you've got to simulate the entire environment in a training ground and put in whatever core banking that you do and put them through the quizzes and create a fun learning culture in using technology. If you do all that, I think then you have a very good onboarding process. And every month take a survey and take a feedback from them. I think it's very important to get a feedback to understand what makes them tick and how things have to be done. And also lastly, developing an internship program will be very good for people in the banks. For example, in the summertime, you must get interns come and work with you and do certain things for you so that your managers and senior people understand how to deal with these people because they're going to join them anyway. At the same time, you develop a group of people across the system who intern with banks and to understand everything else. So I think if you do a formal process, simulate the environment, listen to them, get senior people to come, communicate everything else, it will really work. But it's very, very people intensive. It's very management intensive because you are developing the core of the new organization. You're developing the new bank. You're developing changing your culture, and you have to pass on your values. It's very important to pass on values. Because, madam, I think all the people in banking today here are grown up in a value system is very different. Values comes naturally to them. It came to the family, it came to the environment, it came to leadership. Now you need people to inculcate the values because they're very individualistic, they're very consumer-oriented, they want quick returns, and they don't see being at the edge as anything wrong. Whereas we had this papam, we never want to do any papam in our lives, right? We are very scared to do wrong. We don't want to do wrong. We are all scared. But they're not scared. They're very adventurous. So I think it's very important to inculcate the value system of a particular bank. So the chairman should go and talk to them. These are the values. And we leave the values. And they must see the senior leaders leaving the values. And this value system, I think, will make a new thing. Thank you.
Thank you. Certainly you lived and exceeded my expectations. Thank you. Dr. Santanu Paul, I think he's left at this the right spot for you to take on.
Yes, I hope so. So clearly, interesting starting point for this. In fact, there's a wonderful book. I thought I'd start with that, listening to what Mr. Mohan Desai was saying. There's a book called Leela, which is written by this famous writer, Robert Pirsig, who's a modern philosopher, who basically studied a variety of systems around the world, and philosophically as well, and came to the conclusion that the most healthy, interesting system and organization is where static patterns, as he calls it, are in balance with dynamic patterns. Let me explain what that means. Whenever you hear the word rules, procedures, policies, circulars, these are all static patterns. These are forces of stability and order, and we all need them to run organizations, right? But when you hear words like experimentation, creativity, being enterprising, right, being innovative, being experimental, all of these are dynamic patterns because they deal with the forces of change. And my submission is that, having worked with the banking system in India for the last 2-3 years, and perhaps a little more with the public sector system than the private sector one, we have a system that is not really entirely in balance. The static patterns are crowding out a lot of the dynamic patterns. And I think a lot of the dynamic patterns that just got talked about by Mr. Mohan Desai is exactly the example of what we need to bring in a large amount. And not to displace the static patterns, but to create a balance. Let me start with a little story, because the story, I think, kind of captures many of the issues we are talking about here. The story was told to me by a young banker. Let's call her Aarti for the sake of confidentiality. She got picked up from a top-notch computer science program after a master's program in a very good campus. She was a campus recruit in a public sector bank. And in her thesis and master's, she actually worked in the area of information security. So when she came on board, obviously she thought, and she was told that the bank needs a lot of information security expertise, and that's why we are hiring you. Now, as she came on board, she basically did something very interesting. In the first few months of her, when she got it kind of established, she suddenly had this idea that, why don't I spend a weekend coming into the office and run some tools which actually can check the safety and information security quality of the bank's website. And she ran a report as a part of that over a weekend, which basically said that, look, there are these 25 flaws that need to be fixed in the bank's website, because if you do that, you're going to have a very robust website. Monday morning, she very enthusiastically walks into her boss's office and says, hey, I have something to tell you, because I'd like you to look at this, and I want you to give me some advice. Now think about it, right? If someone like this does this for my organization or some other organization, I'm sure, we will all basically stand up, put a garland on her and say, this is fantastic. Why don't you teach the rest of us how to do this kind of analysis? Because that's what we all want to do. Well, lo and behold, when she expressed this to her boss, her supervisor, the supervisor just blew up. And he said, under whose authorization have you conducted these experiments? Right? That's a perfect example where static patterns are crowding out dynamic patterns. Here's a person who actually can be a great asset for the organization. And the last time I know, she's looking to get out of this organization because that one experiment has actually cost her a lot of confidence in the system itself. So this is very important to understand that I think this is an area where we have to really do a great job of inducting people. And this goes back to the whole concept of training architecture, which is what I'm going to talk about a little bit. Before I get to the training aspect of it, let me just make another simple observation. I get to work in my organization in Talent Sprint with a lot of young people who want to become bankers. So we deal with them when they're aspiring to become the next generation bankers. And we also have the data to know that there's a huge influx needed of young people who need to come in. If you ask the typical young person, why do you want to join the banking industry? The answer usually is the following. The answer is, I want a safe, secure job, fairly hassle-free, with fairly guaranteed, assured career progression. And of course, good money, etc. goes with it. But if you ask me, if I'm today's banker, if I'm running a bank or I'm a senior person in the bank, I'm looking for a person who's slightly different. I'm looking for somebody who enjoys customer interactions. I'm looking for somebody who would actually like to spend time with customers, solving financial problems for the customers, giving them peace of mind. I would like to have a person who likes to play with technology and dabble with technology, because after all, we all know that a bank is a technology company in disguise. So we want people with that experience. We want people who have some interest, some knack, some nose for financial products and financial services, some kind of desire to innovate on financial products. But somehow our selection process itself, we're not actually bringing in such people into the system. We are kind of catering to an old static pattern. In fact, I think the selection process has remained the same for a long time. It's an aptitude-test-driven system exam, and then followed by an interview process where we don't really look for these new things, which is customer orientation, customer intimacy, technology savviness, and financial product-related innovation, desire, whatever. We don't look for those things. So we are kind of starting off with a problem where inducting people who are not necessarily the best for the bank, perhaps in terms of the quality of skills we are looking for going forward. Then you put them in an induction program, and you look at the architecture of that program for a minute. The induction program remains, by and large, still very much a chalk and talk model. There's a wise man or woman on stage who will then, sort of hold forth for a few weeks, and various people come and go. There are some exercises. There are some definitely interesting innovations happening in many banks that I'm aware of. But if you look at the person, again, to take the example, if you're looking for somebody by the name of Aditya who's just joined, and the person is 23 years old, this person has lived, as we just heard, through a generation of Facebook and Twitter and being online all the time. In fact, they find the mobile phone and the computer to be a far more friendly thing than a classroom. And in fact, another person. And they're in a continuous learning environment. In fact, they need to be in a continuous learning environment because they learn in little bits continuously. We have turned, historically, training into an event. It's a big event. We organize a big event called induction. We put them there for a period of time, and then we bombard them with stuff. Why does it have to be like that? It can actually be a series of continuous input done through a model which we call click and mortar. I think the days of brick and mortar training are coming to an end. We need click and mortar. We need the contact because that's where you create performance coaching, mentoring, and all the things we need. But you need the technology to give you a continuous learning environment because, as we know, if we induct a few lakhs of new trainees, we're not going to have the classrooms to finish that kind of a event-driven, one-time induction training process. So the training architecture, in my view, has to become open, continuous, and it has to become driven by click and mortar. The third part I want to get into is the area of innovation and, to some extent, experiential learning. For example, I think if you really look at it, experiential learning is something that you kind of expect to see with a lot of middle management and leaders. If I look at the leadership development aspect of banks, I think the same brick and mortar tools are still being applied to a large degree, even though innovation is coming there as well. But let me give you an example of how all this kind of comes together through another story. Right? About a couple of years back, a new banking product, which happened to be a skill loan, was innovated and designed. The chairman of a public sector bank, along with the finance minister at that time, announced it with a great degree of fanfare, and we kind of went out and launched this product to help create more people with skills. It took 6 months for that decision at the top to percolate down to the branches of the bank. In fact, every time we went to the branches and said, where is this product? How can we issue them? They said, the circular has not come. So it went around for 6 months, and finally my team told me, the meaning of circular has changed. I said, what is the meaning of a circular? He said, a circular is a document designed to make people go around in circles. Right? So that's how it is. And we found that the reward system, the incentive for actually pushing people through this, and actually helping the management to understand that your performance, your actual success in the bank lies in pushing through such really new products, etc., needs to be part of the whole process of learning and part of how we perform. And I think a performance management today does not check for macroeconomic knowledge, does not check for public speaking, it does not check for understanding how to kind of create innovative learning organizations. So those are the kinds of things in leadership that we're also talking about. I know I'm out of time, so I'll finish with a very small story about experiential learning. And this is very important to understand because experiential learning is really what will ultimately work with the people that are coming into the system, whether they're 25 years old or they're 55 years old. The only way forward is experiential learning and action learning. Learning by doing things and doing things in an interesting way through competitions, quizzes, simulations, virtual labs, etc. The story goes like this. In the 60s, 70s, the two of the most famous psychologists of the 20th century, one was Sigmund Freud, other was B.F. Skinner. Skinner was a behaviorist. He taught at Harvard. So one of my friends who I worked with in the past happened to have taken a master's in psychology, where the first class he attended in Harvard was being taught by Skinner. So he went in with a lot of expectation, a lot of fear, and of course a lot of admiration that he was the great giant of 20th century psychology who was going to teach a class. So apparently in that first class, Skinner walked in with about 35 or 40 cages. Each cage had in it one parrot. So you've got 35, 40 cages. Each cage has one parrot in it, which is chirping away. So he comes to class, he starts the class, and then when he finishes the class, he says, look, this is a 12-week course. At the end of it, some of you will pass, some of you will fail. So here's the assignment. Each of you get to take home this cage and a parrot. At the end of 12 weeks, again, remember this is a course in psychology, at the end of 12 weeks, those of you who still have a live parrot get to pass, and if your parrot is dead, you get to fail. So that's the kind of I think intense experiential learning we need to introduce in the system. So some of the thoughts I just thought I'll start with, and then we'll go forward. I'm sure we'll have more questions.
Yeah, I think Mr. Mohandaspai and Dr. Santoni have given a very good introduction to what I'm going to cover. So I'm not going to cover the areas. They're very right to put it about how to use technology and how to use the learning methods. We have all been talking about vacuum at the top leadership level. When I was listening to the eminent speakers, I thought I must bring to your notice that the middle management and the base is not strong, what the top can do. So if you look at the statistics of the banking system, you'll please find that 50% of the workforce now in the banks and the next 5 years will be new recruitees. The next 50% will be going away. Now, do we have the time to build the skills and leadership in this 50% who will run the bank in future? Now, a major income and business from the banks come from the branches. Most of them are manned by people in the middle management cadre. Now, if there's no middle management cadre which has got capabilities, what the top will do? So my concern is if 50% of the middle management is not going to have the skills to run a bank and even the basic systems of banking, I think it will be very dangerous. So I think while we look at training and building leadership at the top, let us not forget that the pyramid stands on a strong base. If the base is not strong, the top also cannot stand. So I think our training systems will have to gear up to this skilling the middle management level, which is, and unfortunately, or fortunately, the survey done by the Knowledge Partner says 35% of the employees surveyed by McKinsey say strongly express they are not being provided with relevant and sustainable training for the current as well as future functions. My apprehension is that many of the talented people could be in this 35% outspoken people. And therefore, if you are not going to focus on this 35% who say that they absolutely disagree with the type of training that the banks are providing, I think we are in for deep trouble. So with this introductory observation, I would like to quickly move over. In the next 5 years, I think annually banks are going to bring in about 200,000 fresh people on an average. Is it possible for the existing training system to take care? There is a technology, but where is the cadre to prepare the material and train these people? So I think we need to bring in a system by which we forget about the brick and mortar training systems we had. And today we use the video conferencing and e-learning systems to disseminate the preliminary knowledge and use the video conferencing system or the streaming system to have an interface between the trainers and the new recruits. Unfortunately, we have overlooked the fact that we have been given a lot of training in transaction handling. We have been given a lot of training in functional areas, but fundamentals of banking and finance are very weak. I just came across one incident yesterday. A person who is aspiring to be a senior person very shortly. There was a crisis in his branch, and he was frantically trying to get to his chairman's secretariat. The point was somebody has transferred money wrongly to somebody's known customer's account, but wants it to be returned without any written instructions. Now, it's not a very complicated case, but a person who's aspiring to be the rest regional head, if he does not handle the system and wants a direction from the chairman's secretariat, I feel that the fundamentals of banking finance have not been inculcated. The person has risen in the career. The other one was a deceased customer's account, again from a very leading bank. I came across that case. The person is there 2 lakhs of rupees to be distributed among the deceased who is a spinster. It's been 3 years and the manager, who is a senior manager, insists that all the claimants should bring a CIBIL score. And so ultimately it has to go to the ombudsman and the issue has to be resolved. My point is today we are inducting people in large numbers. They are going to be the future strong foundation of the banking system. Let us not ignore strong grounding in fundamentals of banking and finance. That has to take place right from the clerical and the probation officer's cadre. So that is one point, I think, and the number being large, please use technology like video conferencing to give these people training wherever they are without bringing me to a training center at huge cost, and that is possible. The second area I'm looking to is empowering the branch managers. And again, that should be done not for the purpose of discussing the target and the achievements, but to ask them who is the second man in your branch who feel can take over you tomorrow you disappear from the scene. We never do that. And therefore, we don't identify people at the field who can grow and can be groomed in the next 3 years, and who probably, even if there is a relaxation in the service condition, he can become a regional head because you have provided him every 6 months, every 1 year, a rotational job in different positions based on his aptitude. Why should he wait for 3 years written test? Another point on training enhancement, which make people be always trained and will always aware, is that introduce a scoring system. Why do I hold a promotion test once in 3 years and promote people who are scored 90%, but in the field they are 0? And that's my experience as heading 3 banks. I feel I promote people based on 90%, 80%, 70% score in examination, but they're not able to deliver in the field. So am I not doing a skewed process of succession planning? I must talk to my branch manager and ask, apart from meeting my target, have you trained somebody else in your branch that when you're absent for 1 month, he will run the branch as efficiently as you are doing? We don't have that system. I think we should need to bring a system. It used to be there 10, 20 years back. We have forgotten that. We need to bring it back again, make the branch manager also the principal of the branch training system. And I think if you introduce a system of periodic staff meetings for inculcating knowledge and experience, as Santanu rightly said, learning will become an experiential learning, not a theoretical or a conceptual learning. I want to bring about Rudyard Kipling over here. I just came across his poem, his small writing. He says, I got 6 powerful servants. I would say I got 6 powerful gurus. Who are they? He says they are why, what, where, when, how, and who. He says, you may have all those, but if you don't know why, I think you are not going to achieve what you're going to have. And in our training system, we teach the transactions, the policies, the procedures, the regulation, but why are they there? I don't know the background of this. That's why I don't understand when a solution comes, I run to somebody for a cut and dry solution. So let us bring into our training system the why question. And similarly, in our accountability policies, we ask so many questions. The moment there is a mistake, as you rightly put it, I try to find out who did it, why did he do it. I don't ask why did he do it, I do who did it, where did he do it, when, and then hang him or hang her. My point is, let us go to the why of it first. Why did it happen? And then do we build up cases for passing on to the next generation of employees that this incident took place, success or failure, for certain reasons. Rightly or wrongly, there were reasons. We don't share the reasons. We only share the information that so-and-so was punished or so-and-so rewarded. We never share with our employees why a particular incident happened and why we are rewarded, why you are punished. So I feel as a part of the training system, experiential and interactive, each bank, with the help of institutions, need to bring up cases where there has been success, there have been failures, and more than that, instances where you have lost a good customer whom you found useless with you, but went to somewhere else and prospered. We need to understand that, and this study should come into our training system so that people know to have adaptive and situational leadership rather than a cut and dry leadership. I think I'll stop with this. Thank you very much.
Before we get to the audience, I would like to ask any of the panelists, would you like to make any comment at this stage, or would you like to take it? Yeah.
I just want to make one comment which I found. You know, how do you create comradeship or a sense of teams? I find the IAS system to be very good, even though sometimes it's very oppressive. Because in the IAS, you train as a batch. You're a batch of X year. And that creates a team. So somewhere in the training is important for people to be together. We agonize over this in Infosys when you hide all those people. And because, you see, human beings are emotional. They have to build relationships. Now, in the entire organization, if you know somebody because you're trained, they can pick up the phone and call and it will be done. But if you don't know and the person is a stranger, because you've not built networks, you've not met them, you've not done everything else, then you don't know what to do. Then it's a very inanimate mail that comes, what do I do, is anybody, so you have to build this comradeship with everybody else. I think that's a very essential part of team building. That has come as communication. And in training, there must be some time where they all spend together and they ideate, they understand each other, so they build a network.
On the last point, I can 100% vouchsafe. We started this program called the Kafral Advanced Leadership Program last year. The biggest takeaway from that has been the camaraderie. And I can tell you that, I don't know how many of you here who may have been through it, but the people who came out of that are still in touch with the others who were there. And the kind of exchange of information on any issue, whether it relates to IT, whether it relates to a customer who has come to you, or any kind of exchange of information, pick up the phone, talk to him, you know the other person, you know how he reacts, you know from whom to get it. I think it was a huge takeaway. And I mean, I can assure that, and we are starting a new program on Monday, and this is the one thing that I would say has been the biggest takeaway of that program. Now we'll open the subject to the audience. Please identify yourself and ask your question, or if you want to make a comment, please do make a comment. Oops, okay. Yeah, the person who's standing up there behind. No, I think, okay, why don't you start?
Madam, my question is, the Bank of the Future today we are talking about that financial inclusion is also one of the important agenda of the government as well as the banks, because it's obligatory as well as opportunity. If that be the case, the number of rural branches are going to be doubled or tripled in the coming 5 to 10 years. Or the banks are ready as far as the recruitment process is concerned. Because today the recruitment process, especially in the public sector banks, is more of urban bias or urban oriented. The persons who are recruiting the banks, they are not interested to work in the rural. But when that be the case, how we are planning to recruit, or rather to handle the rural branches, another 2 lakh people are required. How we are going to handle that?
I would say 2 more questions we'll take. Anyone has a related question on this subject? Related question on this subject. Yes.
I'm Ronnie Gupta from UCO Bank. Since we are talking about financial inclusion and branch expansion, and I think most of the public sector banks are now facing that in our country, we have around 15 LW districts, left-wing extremist districts, covering Jharkhand, Chhattisgarh, Odisha, and Northeast. So while opening the branches and placing the cadre over there, we are facing difficulty in putting the people over there. And whenever we are pushing them, they are just reluctantly waiting for the 3 years. The results are not coming up. And since our recruitment process in PSBs are through the IPPS system, where the clerical cadre is recruited at the state level and officers are recruited at the all India level, why don't we think of putting in place a separate segment or separate recruitment process where the local boys and girls can be trained, skill developed on the banking operations and all. And after the skill development, we can take those people who will be really son of the soil to serve the people masses. Since you are an ex-regulator, ma'am, and my senior ex-chairmen are sitting over there, so this is something we can do the inclusive banking in a proper perspective.
Yeah. Any other question related on this?
Yeah, I have a question. So this question is addressed to Mr. Pereira.
No, on this particular issue.
On this topic, what I was coming to was, as we all know, we are facing a huge talent gap, especially at the bottom. As Mr. Pereira has pointed out, the foundation needs to be strong and all that. So in that connection, I had a small suggestion. There are various kinds of coaching classes being conducted by various organizations, let's say IT coaching classes like NIIT, AppTech and all that. Since their visibility is very high and the youngsters are attracted towards these classes from a very young age, why can't the IIBF tie up with these classes and set up a chain of training centers whereby people can be groomed from a very young age? They are made aware of the banking sector. Banking sector is given a big publicity boost. Second, they are attracted towards the banking sector, and this will slowly add to the talent pool. We all can devise a system whereby these people, brightest of these people, can be inducted in the banks, and they can be used for innovations in banks also. That's my question.
Thank you. Who would you like to take it first? Amongst us?
Yes, ma'am.
Okay.
My question
is it related to the same thing?
Yes.
Okay.
Ma'am, I'm Balveer Singh from PNB. What is happening now after financial inclusion? We want to spread in rural area, but no one is ready to live in rural area, to post in rural area. He counts the days of his posting in the rural area. So they cannot do the rural posting or the financial inclusion work from their own spirit. So now the government come on for the health services. They have started a separate course for doctors. They will post it in the rural area. Can the banking system can think that the person who is recruited for the rural area should work in the rural? Because ultimately they can give the services in their own language, on their own test. Today the person who is coming from the urban area is not learning his local language, and the person who is the rural area is not comfortable even to talk.
Yeah.
With the permission of the chairman of Bank of Maharashtra, can I narrate the experiment that your bank has done in 2009-10? Bank of Maharashtra has got large rural branch network in India, and more particularly in Maharashtra and Madhya Pradesh. We had a problem, I was there for some time. We had a problem of almost 10 years, 50 to 60% of the vacancy in rural areas not being filled up because we recruited on a mass scale, 60% of the people would not join. So we devised a system. We said we deliberated a lot. We have two issues. One is constitutionally, we cannot discriminate regional or on any basis. So we have to be fully constitutionally compliant. We have to also meet local aspiration, and we wanted to do it at the fastest possible time. So we did it with the clerical recruitment. The bank decided that we'll recruit clerical staff in such a way, we'll declare the vacancies district-wise and state-wise. And anybody from anywhere in India can apply. The condition was that if you have to have 2 or 3 choices indicated in your application, districts or state. Now, when you apply, you must say that you must know to read, write, and speak the language of the state and the district. There's no other this one. Number one, the minimum requirement was graduation under the government's policy. But we knew that if we also had open 12th standard pass with 60% marks. Now, if you hold a written test, a large number will attend coaching classes, try the examination 3 to 4 times, and master the art of answering the exams with 95% score. But in the branch, they don't perform. So what we did was there will not be any written test. There was a lot of debate from the unions, the board members. Ultimately, we said we'll take an experiment, a great risk. We said no written test. How are we going to shortlist in a transparent manner? We put it in the advertisement that the shortlisting for each district would be, first of all, you should be a graduate or a 12th standard pass 60%. Then the only qualification is you should have scored not less than 60% marks in arithmetics. Because I want numerical aptitude on my desk. And if you're bright in arithmetics, you certainly can pick up anything else. So we made the shortlisting of candidates only based on 60% minimum marks in arithmetics and SSLC. Therefore, we eliminated all coaching-related recruitment. And you won't believe, the bank succeeded in filling up 98% of its vacancies in rural areas. The bank saved 1 crore of rupees, and the bank completed in 4 months.
I think that's a very, very innovative suggestion, implemented, and the results also in front of you.
We have no constitutional or legal issues to
And that's the most important thing. Because being public sector entities, you're open to RTI, you're open to this, you're open to all kinds of things. And that was a problem, Mohan, in your suggestion, that you see, you can't do this for a public sector bank. And that's why it's, in the private sector bank, you've got many more degrees of freedom to be able to do different kind of things. You don't have a policy that before a person becomes scale 4, he should have had this posting, he should have had that posting. I mean, it's tying up the system into knots. In fact, Madam, I would say that under your leadership, this Bancon, why don't we look at what are those knots that are being tied up with the requirements, and maybe some small group you set up to prepare a kind of a paper which goes to the ministry on this whole issue of I mean, we've seen the court case on the recruitment. I'm saying let's go along with whatever conditions we do, but try to see where we are able to really handle this problem of rural recruitment. The problem of rural recruitment, you all remember the experience of the RRBs. You know, we were looking for people from the region to come and work in it. And like Mr. Mishra said, again, they started feeling that second-class citizen problem. And then the pay scales were also brought on par with the banking. So in RRBs today, there is no real differentiation. And then there was always this stepmotherly feeling towards the RRBs. Aspirationally, it becomes very difficult. State Bank had tried the same thing in the Northeast, if I recollect, trying to get people locally. But ultimately, they want to become part of the bigger system. But to a certain extent, we have to do that. But I think this whole issue of recruiting and retaining for the rural areas, because ultimately we will not be able to make the bank perform. Even the business correspondent model requires a mentor there. In fact, some of the banks I found have employed what they are called channel managers, where their own retired staff in that area work as a mentor for the business correspondents there. And in those areas, the BC model is working really well, because their own bank staff has been taken to mentor the staff and, make them fully familiar with what they should be doing, and also creating that value system and that loyalty amongst those staff. So banks are experimenting, but I think we're not really putting it all together. I mean, this is a real good case study. We should actually make it into a case study.
At the end of the 6-month probation period, the bank held a written test with the help of IBPS to ensure that they learned everything, procedures, banking, everything. And again, more than 90% qualified. So, I mean, it's
really,
it's
really
experiment.
good experiment.
There's no legal issue, there's no government legal violation. It's only an initiative done by the bank.
Something.
We really have a very, very huge HR issue. There's no doubt about it. Now that I'm thick and thin of the Bank of India as operations, And yesterday only, we got about 20 minutes with the governor. So I just mentioned to him that now that competition is going to increase with the foreign banks coming in, and also the new licenses coming in, our hands and legs are tied as far as the recruitment is concerned. So then he said, we will definitely look into it, give us a short paper. So
I think this hands and legs being tied had actually come up in an earlier roundtable of, the one that we organized in Udaipur, where we wanted you to come. Same problem came up. Because what we were trying to do is this mass market banking, if you're going to go in for, then you have to have, not only do you want to have a low-cost kind of a model for doing that mass market banking, but you also want to have people who are oriented towards it. And that orientation is not happening amongst the mainstream. Yeah. So today, obviously, lots of other things which are on the anvil is, should you have small regional banks, local area banks, even the FM mentioned yesterday. But I think the biggest problem we have to tackle with, ultimately, aspirationally, we have to be able to deal with it as well. But I think these hands and legs being tied, I really feel that, you can take it up with the Indian Banks Association, Mr. Ramkrishnan, so that we actually arrive at a blueprint for better policy.
And I also tend to totally agree with Ellen Pereira. We really have a real problem is in the middle management. Okay, the specialist cadres, somehow we recruit, we train, and they remain with you because they're all taking a slightly higher cadre. Where we're really witnessing real problem is the ground level understanding of the process operations, because the clericals don't want to take promotions. Okay, so they remain. See, in PSB setup, what happens, because of fear of transfers, many don't take promotions. They don't want to go out of the station. They don't want even to go out of the branch. So you've got your own issues there, that apart. But then with them retiring and the new people coming, in fact, in one of the regions, when I just visited, I was shocked to find that even 60% of my branch managers they're not even confirmed in services, but I have to post them as branch manager. So they just don't know the process. So this is a real issue facing the bankers.
I think this is another area where, considering the demography that we are going through, and considering you retire your officers at a fairly early age, you have a lot of energy and a lot of loyalty amongst your retired officers who would be willing to come in and help you to mentor and train your middle management.
Exactly.
It's just a question of planning it properly, see where they are located, put people together. And this is an idea which has been shared by a number of bankers with me. It's not my new thing. But I feel that many banks can use them because they are actually would love to be used.
In all my 52 zonal offices, exactly this we have started last 6 months. All the retired general managers, DGMs, AGMs, we have made a list everywhere, center-wise, and then every week training, continuous training for in all aspects of the banking. And that's really helping, and the people are, appreciating that. Anyway, there's no other way to go about, within the system, you've got to empower them. So what else can be done? So we requested Governor that whatever restrictions are there for the PSBs, it should be looked at it very, very realistically and removed, better for the system. Otherwise, PSBs
No,
are
I think this is an area of autonomy which has to be really
Absolutely
seriously
required,
looked at. Is any other subject which you'd like to open? Oof, yeah. Okay, you've got your mic in your hand, so start.
This relates to yesterday's comment made by Finance Minister, Honorable Finance Minister, that banking of late has evolved in a way in India that there is more of cloning and less of differentiation. All those interpretations have already appeared in the newspaper. I would take little time for that. Would rather ask you a question as to what is the imperative for the banks to tackle this particular issues which has been aired by none other than Finance Minister of India.
How does it relate to the HR issue? Are you saying differentiated licensing when it comes? What do we do? Are you saying that? Or are you saying that how do we ensure that banks are also equipped to do the kinds of activities for which, like private banking, investment banking, and other activities which we can take it up in the universal bank? Because all of you are universal banks. So is that the question?
Yeah, he was mentioning about that banks have to evolve to serve to the communities, to Northeast people, tribals, those kind of things he made. So it have to be seen in that context. Probably he was making a comment on the universal banking as to what exactly is the imperative for the banking sector in general and public sector banks in particular.
Would anybody like, yeah, I think Shantanu.
Yeah, sorry. No, I think this issue of an industry becoming commodity is not unique to banking. I think as products become commoditized and they kind of become essentially clones of each other, I think historically we have seen that in every industry, the final differentiation is customer experience. If the customers are experiencing a different kind of relationship with the organization, that's what's going to make a difference because that's sustainable in many ways. And I think in the Indian context itself, private sector banks, in many cases, the new ones have shown that. So I think we should not really lament the fact that cloning is happening or products are getting commoditized. That's bound to happen as industries mature. But I think where I was trying to make an earlier point also is that we should be selecting now increasingly for people who are highly customer-oriented and also giving a huge amount of training in that area, which is around customer intimacy and relationship management, which I think is not a very great strength of the current training system as such.
Can I add something?
Patnaik, FM's response was in connection with the McKinsey survey that 21% of the women and 44% of the men only have access to the banking. So he said the bankers should find out ways and means, create business models to see that they become universal in getting all the customers into their fold. That is what he was trying to make.
Madam, there is one issue which I think banks must address. They must listen to the customers to find out what is it that people want. We don't talk to them. For example, I'll take 3 or 4 cases, profiles. You go to a village, you ask a woman in the village, what do you want? Talk to them, make a survey and come out with a product designed for women. You go talk to a young person in a college and ask them what do they want in terms of banking, what are the ease of convenience they want and find out. You talk to a person like me who wants certain things, but I don't get it. And I'm very frustrated. So I think it's very important that the customer you listen to and differentiate based upon the customer need and then use a customer experience to become very different.
Does this work? It's working. Okay, the point that I think it's very important what you're saying about what does the customer need. Again, it goes back to that universal banking and the fact that you are having these huge organizations across the country. And India, like you said about Europe, India is, I think, more than a continent. So it has a lot of customer requirements in different parts of the country which are suitable for that part of the country but not for another part of the country. Different categories amongst the customer for which you need to have evolved different products. So I think in this whole process, what does happen is that when you're trying to commoditize or when you're trying to standardize, then you probably are not really meeting the requirements of anybody. So within this commoditization and standardization, how do you granulate to be able to meet the requirements of specific types of customers without being discriminatory and being totally transparent? So can you have a product in Chhattisgarh, in the terrorist-affected regions, which needs to be very different from something in Kerala, for the average customer? So is it possible within our existing, environment to actually have that differentiation across regions? And to what extent can you empower your local regional offices to be able to really offer that differentiation, provided it's cleared at the head office level? Because there is a need. We know that if you have a fixed deposit rate, you have to, for the particular amount, you have to offer it at all branches. But is the product, does it have to necessarily be the same across? As long as the underlying principles are the same. Can you customize it? I think here, again, when you come back to the HR area, it is a question of innovative thinking. And I think that was one point which came from the awards also yesterday. And while doing this whole process of being on the jury, what we found is that some of the banks had done some wonderful things, but they had remained localized. But how do they get now nationalized in some senses? So the State Bank of Hyderabad example, which I really liked, was where they have completely moved away from cash for the Arogyashri health program of the government. No, but this was remained as a local initiative. On the other hand, we found that banks which are very innovative have what you said. They have a innovation steering committee headed probably by the CEO, or even at a very senior level, maybe a general manager, because I quite see the point that it's the general managers who are going to give continuity to these ideas. And then you have a funnel, and you have recognition. So all three aspects of it were needed. Only then you're going to be able to touch the pulse of the people and give out products that you really need. But I think it's an extremely good point.
Just to add to, sorry. Okay, so I was just going to say that this example of innovation, I think a lot of companies that I'm aware of are introducing innovation grants. They're creating a pool of resources and funds so that you can actually have people in the organization work on new interesting ideas on product design, for example, catering to market segments. So again, innovation can be done bottom up, can be done top down, but I think we need a healthy blend of bottom up into the whole process, because that's what's also going to align with this whole energy of the young people getting more aligned and attached to their organization, because their ideas are going to matter. So in interesting ways, if you want to design products for the millennial Gen Y category, which is the dominant category of future customers, current and future customers, there is probably a strong argument to make that new people coming into the bank are well positioned to be part of such product management exercises. So all you have to do is announce an annual grant, a competition every year, saying that the 5 best ideas for new products are going to win, and that just celebrate that as an example.
A couple of things I thought I must share in view of whatever happened in course of discussions. Point number 1, the buzzword today is customer engagement. We have gone much beyond whatever we have been talking. There is the need for the bankers to engage in constant dialogue with the customers at whatever level you are. If this is going to happen on an ongoing basis, what Mr. Mohandas Pai was just telling, it will be easy for us to fathom what exactly are his requirements. This can be customized from place to place. More than that, the entire session, what we are talking about in terms of human capital, what for? I think the only central point would be the sensitivity to the customer's requirements. Maybe at the end of the day, every member who is going to join my fraternity, at the orientation level, what I have to bring in that person is, here you're in a job where you have to be sensitive to the person called customer. And point number 2, in certain areas, you can be a catalyst to change. If you take the rural areas, I have seen certain managers, the way they have played that evangelical role, the local people treat them as gods. Somebody was telling, I don't want to work in rural branch and all. Kindly understand, there are very many managers in my own bank, Bank of India, who have worked in certain places where you believe that you can be a catalyst to change. You could bring about changes in the lives of people around you, and they treat you as a demigod. And this is something absolutely satisfying, and probably no other job can bring this. And point number 3, once when this orientation is inculcated, into the person, certainly we are going to have people who are probably willing to work for shorter periods in rural areas with great satisfaction.
We have 3 minutes left, and we have lots and lots of people having lots and lots of questions, and we have Mr. Pai who says he has to run. So what do we do? I'm willing to stay here till evening. Okay, let's start with you.
That's very important. Whatever we are talking about innovation, what is most important, we should have a fearless banker. The point is, staff accountability is a buzzword today, the way things are moving. And what Mr. Alan Pereira has touched is rightly, we do not see why, we only see who. My only request to Reserve Bank is, it starts from a circular from RBI. Once an account becomes NPA, you examine.
Hey, let's talk about the subjects that we are doing.
I'm not telling, madam, I'm giving a suggestion. Instead of a staff accountability, if I say that why the account has gone bad, which will comprise accountability also, I think that would be better for the industry.
Yeah, but you have also the support of the finance minister in that yesterday. Yes.
Excuse me, sir.
Yeah, let's confine ourselves to the performance management issues, recruitment issues,
Mr. Pereira.
Talent management, yes.
Yeah. I wish to repeat my question. Actually, I could not get the answer to that, Mr. Pereira, sir. Regarding training and regarding the IIBF's tie-up with certain institutions, I didn't get the answer to that. Whether is
no, we can note it.
No, this is already being done. You may not be aware. The IIBF, IDRB, and NIBM, we have been floating common programs for the benefit of banks. In fact, we also collaborate.
No, I think what he's saying is, can you not use the local private coaching centers and bring them?
That's right, sir. Because they have more reach.
Then the question of credibility and selection takes place.
Because this would help in local recruitment also, in fact.
It can be done with retired bank officers. Okay. We have done it elsewhere.
Yeah. Since yesterday, we are keenly listening to the panel discussions, and two phrases have frequently been discussed. One is demographic profile of the country being skewed towards under 25 years of population, and second one is banking literacy. So my question relates to these two factors, that can banks consider to launch some schemes like Bal Khata scheme or something else more aggressively, they are not seen, to address that demographic younger profile in terms of banking literacy? And why are the bank not seen coming forward more aggressively in opening the accounts of kids and younger generation and all?
No, banks are free to do that. It's ultimately each bank for introduce its own product.
I'm not telling they are not free, but it is not being aggressively seen.
Why it's not happening? Now that is a question you have to ask yourself. Yeah. Yes.
I am S.K. Mukherjee from Bank of India, Guwahati. Madam, do you believe that if we have a core faculty in our training colleges, just like NABARD has in BIRD, there is a core faculty that will help the training system better?
No.
Why, madam?
Because you become very static. You don't become dynamic. You're not responsive. You're not changing. You're not innovating. It's a simple answer to that question.
Thank you. Thank you very much.
I'm sorry, I just want to add one response.
Yeah, one more question.
Madam, I am from Bank of India. This attrition of staff at the rural branches is the biggest threat to the bank, particularly PSU banks. I have observed that PSU banks at rural area or say semi-urban places, they are treated as the training grounds. People get experience for 3-4 years and they switch over with better prospects. That is natural. That is human tendency to grow. Now, my suggestion on this background is, we have, PSU banks have a vast pool of business correspondents. And I have myself conducted some trainings for them with the help of IIBF. And they have cleared all the tests conducted by them. And they are presently working on a monthly compensation of say 4,000 to 5,000 rupees. They are from local area. When we are planning to expand to the unbanked area, like our FM suggested yesterday, to give broader coverage to the banking facility, why not to, no, I am not suggesting make them staff, because the moment they become a staff, they will start demanding transfer to urban centers.
No, the business correspondent model is a very
It's very
potential
good.
model. What you need to spend a little more effort and time is to trying to see that they are oriented properly, and some loyalty to the bank should also be infused into them.
They are loyal. I have seen.
And you know that Bank of India, the award was because of your BC model.
Yes, sir, madam. And my suggestion is why not to increase compensation slightly more.
That is left to you. It's a decision to be taken by you.
This one suggestion. Secondly, but they are doing wonderful work as far as this coverage is concerned. Second, my suggestion is that we have something called city compensatory allowance. Mishra Sahab said, why not to give 10 grades to person who works in rural areas for promotions? But as we have seen in PSU banks, many good people, they don't take promotions from clerk, as our madam observed. They don't want to become officers for fear of transfer. Even among officers, they don't want to go beyond scale 3. So I not to give some financial, incentive in the form of some additional benefit to the people who are working in rural areas. So instead of having city compensatory allowance, why not to have rural compensatory allowance? This is my suggestion. Thank you.
Thank you. Yes.
I got just small 2 questions to make. Question to McKinsey. What should be the ideal investment cost in training? Percentage of ideal investment cost in training in public sector banks? Do you have the study in?
Right. I can share the numbers with you separately. I think the point that we were trying to make was something slightly different, which is there is a question of how much formal training you do and how much you invest. But training and leadership development and capability building is a continuous process, and there is a need for you to put in place a process of high quality training, experiential training, which is across the life cycle of the person. The question really is, one part of the question is how much are banks spending on training, but the real question and the real challenge, which also Shantanu referred to, is what is the type of that training? Is it real in the job? Is it experiential? And is it on the job? A lot of this, by the way, does not require a lot of expense, in the sense you don't need to get people at a place to do things, etc. But how it is embedded into the day-to-day job of the manager and how he coaches and develops people is the question to think about.
Okay. Madam,
I think we'll have to call it a day because we're already exceeded our time. I don't want to really do a summing up, but what I feel is we have taken away a lot from this session. And some very good new ideas have come up. The responsibility and the accountability for spotting talent and mentoring and grooming, I think that has been really emphasized and something which should be done right from the top. And that is, I think, all the points that was made here. The kind of innovations that we need to do in the performance appraisal system, I think, is critical. Maybe here we need to have accountability for the reporting officers. Ultimately, the 10-80-10 model is equally applicable here. Are you able to make your performance appraisals reflect that properly? Reflect a normal distribution. There has to be an accountability for every person's report over his career to really reflect that, and maybe take it region-wise. And if it doesn't send it back to the region, all the reports, and say, we cannot have, this is not normal. It's an abnormal population. And given the kind of numbers we have, I think this is something that should be done. I used to have one favorite idea in Reserve Bank, which I used to keep pushing. I used to say that we should take the reports given by every officer over their career and see what is their normal. Then you normalize the normal and try to standardize in a way that you follow the bell curve and are able to really get to a proper appraisal system. I don't think this is impossible. It is something with all the brainy statistics people we've got around here, it can be done. But again, the will to do should be there. Plus, there has to be accountability for the reporting officers. Because today you'll give a 90% mark. Tomorrow, when you want to post him to that person, you say, no, I don't want him. He's useless. So I think that kind of a thing is just not on. On learning, I think the point that was come out in the McKinsey's thesis and also Shantanu mentioned, I think the whole theory of learning has changed totally. This learning by doing and learning by seeing, first hand, is something that is becoming much more important. So I think we need to also completely relook at our ways in which we are really doing our training programs. Mohandas talked about the simulation. Can you not completely, and then he also talked about the need to create a bond. So there is a certain length of time that is needed for your induction. We have gone down to very small induction programs. Should we really be thinking about this again and how we are going to do it? I would say this is again something that one should take away. I like the idea of that onboarding, the monthly survey from an open kind of a response you can get from your new recruits directly to the general manager in charge of the the whole the recruitment process, so that they get a feel of what exactly the youngsters are thinking and believing and having a feedback, and some of the other suggestions as well. So enough that I thank all the panelists over here and thank all of you for being so enthusiastic. I can only offer you one thing. Please send me whatever suggestions you have on my email address. You can get it ushathorat.kafral@rbi.org.in. And I'm sure I'll attend to it and we'll send it on in a structured way to the Indian Banks Association. And maybe something comes out of it. Thank you very much.